Hi, and welcome back to Stop Being Sold. My name is Michelle, and I'm here with Brian. And in today's video, we're discussing a question asked on one of our recent annuity videos. And the question is, are annuities right for Gen Xers? We're talking about people between the ages of 42 and 57, correct?
Yes.
And
Yep.
that's
This
us. That's
guy.
me. That's me. Raise your hand.
Yeah. Yeah. It's a great question too, Michelle. And the answer depends on the person's goals and objectives, just like any financial product. Okay. You need to understand what you want to do with your money, the purpose of it, and then find a product that meets and fits your needs and goals. Okay. So the key to answering this question, though, lies in understanding the advantages and disadvantages of annuities. For some, annuities are good if some of the advantages of annuities meet your goals and objectives. But
Mhm.
for, there's some of the group that annuities wouldn't be a good fit based on their goals, time frame for using the funds, and their actual objectives with their funds.
All right, well, let's discuss this further. But before we do, if you like the content of this video, hit that like button, helps us grow the channel. And also don't forget to subscribe so you don't miss another video from us. All right, Brian, so let's dive in and go over the advantages and the disadvantages of annuities and break down this question further.
Okay, perfect. Let's start first with defining an annuity. And an annuity is basically a long-term contract with you and an insurance company.
Mhm.
You put in your money, it grows, and in return for your investment, you get either income in the form of regular payments sometime in the future, or you could cash the funds out and walk away. Okay. So there are quite a few advantages to annuities. Number one being tax deferred growth. You pay no income on the taxes, or no income taxes on the earnings from
Earnings.
your annuity until you begin making withdrawals or receiving payments. So note though, if the funds you're using to purchase an annuity are already in an IRA, there's no additional benefit to you as your IRA is already a tax deferred account. So
Got
remember
it.
that.
Okay.
Okay. Unlimited contributions is the second advantage. No limit on the amount of after-tax money you can put into an annuity, regardless of your income level or sources of the income.
Mhm.
If you got pre-tax money like an IRA, you have to remember the annual contribution limits though. So
Okay. That's important.
very important. With the annuities, no required minimum distributions if you have a non-qualified annuity at, say, age 72, unlike IRA annuities. So
Sure.
there is a difference between them.
Okay.
Here's another one. Multiple investment options. MIGAs and fixed annuities give you a guaranteed fixed rate, while index annuities allow you to participate in the gains of an index like the S&P 500 without any downside risk. So
Okay.
how about limited losses as another advantage? With a fixed index annuity, the insurance company may guarantee that you no longer have stock market losses, right? If the market goes up, you get a percentage of the gains up to your cap or your participation rate. Market drops, you get 0% interest that year.
Yeah.
That's still
Income
better
loss.
than losing 20%, right?
Sure. For sure.
Another advantage is death benefit. Since these are insurance contracts, there are different death benefit options available to your heirs if you pass away prematurely. And the last big advantage is no probate. This is huge. This is a huge benefit in that most annuities will bypass probate and your
Pass
money will be
directly.
paid to your beneficiaries.
Right. All right. Well, that's a lot of advantages, but we know the devil is always in the details. So
Always.
let's talk always, or in your annuity contract. Check that out.
I love it.
Well, really, in all seriousness, what about let's talk disadvantages?
Okay. Number one, high or long surrender charges. It's
Mm,
that simple.
yeah.
Most annuities will have different terms as far as their surrender charges. Many of the states, though, Michelle, will limit these to 10 years as far as locking up your funds for 10 years and no more than a 10% penalty if you cash out your annuity before the end of the term.
Okay.
So that's one. Um, here's a big one. If you're expecting stock market like returns,
Yeah. No.
don't. You're not going to get them. I'm sorry. Let me say, you most likely won't get them.
Right.
It ain't going to happen. Okay. The indexed annuities would pay you gains up to your cap or your participation rate each year. It's that simple. And then
Okay.
a third one is early withdrawal penalties prior to the age of 59 and a half.
This is why I think that question, are annuities right for Gen X? This is a big one because if you are, let's say we just did a video and you should go check it out. Descriptions below. It's on the number one tax mistake that can eat away in your annuity profits. And in that, we're using an example of someone that was 35, but let's just use the Gen X crowd. Let's say that you're 50 and you have that 5-year MIGA. And at the end of the term, you decide to just
Walk away.
money and go to wherever you're going to go, right? There are penalties because of how the IRS
10%.
sees that.
10% early withdrawal penalty on that before
And
the
taxes,
age of 59.
taxes on the earnings as well.
Yeah.
I mean, if it's not properly rolled into something, right?
Right.
Walk us through that.
Again, it comes back to, look, are they right for someone in the Gen X age group? Yes, if it meets their goals and objective. Right. No, if they're not going to hold it till past the age of 59 and a half.
And there you go. That's your answer right there.
There's your answer. It's that simple. So
understand the details. That's the point here. All right. So again, we put some of our top annuity videos in the description below the video. Make sure you check those out and do check out that number one tax. That's really important, especially since we're talking about a younger crowd here today. That one refers to that younger crowd as well. So do look at that. And also other videos. If you like the content, hit that like button, help us grow the channel, and don't forget to subscribe.
Exactly.
Ryan, you got anything else you want to add now that I've basically wrapped it up? Anything else?
Real quick. It's your money. Understand what you want to accomplish with your funds before you buy any financial product. It's that simple.
Amen. Awesome. All right. Well, thank you, Brian. And thanks to everybody who watched to the end. Don't forget to hit that like button, subscribe, and we'll see you next time.
Thanks, everyone. Thanks, Michelle.